So I'm going to show you the strategy that made me a full-time trader. I've been trading about 7 years. I've mentored over 600 students. I've been traveling the world. I live in a Miami penthouse, blah, blah, blah. The reality is, if you just do exactly what I say in this video, you can copy me and copy the same strategy that took myself and over 500 of my students to now being profitable. And if not just profitable, some of them are making over 10K a month. Some of them are full-time traders. Some of them, like Stan, made like 25K last week. Crazy, crazy stuff. And it all stemmed from this one simple strategy that I want to dive in and show you that pretty much all of you could do right now, because it works on all stocks, it works on options, shares, futures, everything. And if you know about simple automations, which is something I'll show you later in the video, you can basically do this in like 30 minutes a day. All right, so let me dive in. Let me show you guys the actual strategy. Now, the strategy is called balance theory. This is a strategy that not many people know about, something that I don't want to say I invented it, but it's something I kind of helped formulate and figure out. And there's a lot of different lines, a lot of crap going on my chart right now, but I'm going to make this really simple and make it really easy because it's actually a very, very simple strategy, okay? And the way it works is something like this, okay? Now, let's say price is going to be in what we call a balance zone, okay? Because most of the time, price is typically in two phases, right? The first phase being a balance zone, which looks like this, and typically price is very consolidative, price is very up and down, very choppy, a little bit hard to trade. A lot of people can't really trade in this quote chop, right? Now the other phase is when price is typically just going in one direction, right? Straight down, maybe it's in a little bit of a downtrend, or maybe going straight up, a little bit of an uptrend, right? And these are what we call expansion phases, okay? In this phase, price is typically going straight up. This is when you be buying options, you're making a ton of money on premium, and that's how a lot of people tend to make money. However, what a lot of people don't know is that the real money is actually made in this chop. Just that a lot of people don't know how to actually trade it. But there is a way to trade it that makes it very, very simple, very, very easy, and that's what I'm about to show you in this video, okay? So let's say, for example, we have that chop again, okay? So let's say we have a basic, we'll call it support resistance, what everybody likes to call, right? This is our support resistance area, right? Now, obviously, we have a pretty clear resistance right around here. Let me go ahead and make this a different color. Makes it a little bit easier to understand, easier to see. Boom. Now, let's say we have a support level right around here as well, okay? Now, this strategy is not support resistance, okay? I'm not going to tell you to buy when price comes down to support and then sell when price goes up to resistance, okay? Because that strategy doesn't really work necessarily. Now, balance theory is kind of like a spin-off of support resistance, right? It's kind of like combining it with another concept I like to call stop hunts, okay? And here's how balance theory actually works, right? All you have to do is simply wait for price to go out of that out of that contraction phase, right? So let's say price is in the middle, and let's say price dumps down here to like 203, 204, okay? Now, we gotta understand as we're traders, something is happening here, okay? Two things are happening, right? The first thing is that this is a breakdown, right? And a very common strategy a lot of new traders will trade is a breakdown short. So when price breaks down of this consolidation area, we're going to have a bunch of new shorts who are getting in short right in this area here, right? Now, that's going to drive a lot of selling pressure. Now, the other thing that's going to happen is that a lot of people who are long in this area here, because you got to remember, price has been building up in this area for days, sometimes even weeks. And when price breaks a very clear support level, everyone who bought there is now going to be selling. And that's going to add to a lot more selling pressure, right? So we're going to start getting a bunch of selling pressure in this area when price goes lower. Now, here's the kicker. If we have all this selling going on, everyone's dropping price, everyone's selling, the market's going to crash, oh my God, everyone's selling, but then something else happens, right? You would expect price to continue to fall, but what happens if price doesn't fall? What happens if price actually goes back higher, right? That is what we call something that should be happening isn't happening. And that is where there's opportunity, right? That's where there's opportunity to trade. Because let's think about what's really going on. There's so much selling going on here. Price should be dumping all the way down to 190s, right? But if that does not happen, then it tells us there's something else going on. And that something else is I'm spelling this way wrong. Institutional, you get the idea. Buying. I butchered that. But you get the idea. Institutional buying is going on in this area here, right? So I'm going to draw it as like another zone. I can kind of draw like this. We'll make this like a nice little blue. So there we go, okay? Price comes down. It should be dropping. If it's not dropping, we have institutions who are coming in and scooping all of those shares up. They're just loading them. They're just like, give me those shares. Let me buy them. Let me buy them. Let me buy them. Because think about it as an institutional perspective. If price is all the way in this area here, prices are between 205 and 209, okay? That is what is considered fair. It's called fair value, okay? This is considered fair value. So if the price dumps, Now institutions who are looking to get in, they're going to get in at a discount. That's a great deal. It's like, I could buy this thing at $208, or I could just wait for it to go lower and buy it at 204. If I'm an institution, I'm going to look to buy it at 204. The other thing with institutions is they got to get long when there's liquidity, right? They can't just buy whenever they want. They have to buy where there's liquidity. So if there's all this selling pressure going on, they have the liquidity to now buy. They can scoop up all of those shares and all that selling. They can just grab it, and then shoot this thing all the way back to the moon. And that's what the strategy is at the end of the day. It's just taking advantage of retail versus institutional trading, okay? And that's exactly what happens here, okay? So price comes back up. Now, where does the actual trade take place? How do I actually take advantage of this? Because what happens is typically when price goes back above that support level, price wants to do one thing and one thing only. Okay, and this is the edge. This is where this trade comes into play. Price wants to go to the other side of that fair value. Okay, back to the quote resistance. Why? Because again, this is considered fair value. We call this a balance zone. Price is in balance. Okay. When price is in balance, it's going to keep going to both sides of it. It's going to keep going to the top, going to keep going to the bottom. It's kind of like an auction. It's like trying to figure out if the buyers or the sellers are stronger, right? So price is going to go up here. It's okay, are there enough buyers to take us higher? No. Now it's going to come all the way back down. See, are there enough sellers to take us lower than the support? No. And it keeps going ping-ponging back and forth until it figures out which way it wants to go, right? In this example, we did it, but it was a fake out. It was a stop hunt. And that's the whole point of this strategy. You're waiting for a stop hunt of support. You're waiting for institutionals to come in. Then when it comes back in, that's when you want to get in long. You want to be buying it right around this area here, right? Make this different color. This is when you want to be buying. When it's coming back up, when the stop hunt has already happened. Once you already know institutions have bought into it, that's when you want to buy. You don't have to try and guess where they're going to buy down here. You don't have to guess about any of that. You simply just want to say when price starts going back up, that's when I want to buy. And all I'm doing is scalping this to the other side. I'm not looking for a move all the way up here. Okay, I'm not crazy like that. I'm not looking for anything like that. I'm simply looking for a move where price can go back up, right? I can scalp it from somewhere in here to somewhere right here, take my profit, and walk away. And this happens every single day in every single stock, all the time, all time frames, daily time frame, 1 minute time frame. I'm going to show you a few examples, but that is essentially the strategy that is balancing. And I actually want to show you a trade I took yesterday on BDX with this exact setup. Okay, and you can see I'm actually still waiting for another drop, so excuse a lot of my lines here. I have a few different things I'm looking at, but for now, let's keep it really simple. Okay, let's start on a daily chart. Okay, now BDX, by the way, is a great stock for this, okay? And I actually do have a scanner video. I'm going to leave in the link in the description. I want you to check it out after this video. It's going to show you how to find these types of stocks for these setups. But check it out after because I want to go through the strategy now. So that'll be the first link in the description. Now, what I want to do with this is you can tell that this is a very good support resistance stock. You can see right here, 1, 2, 3, boom, support, 1, 2, 3. The support's a little bit harder to tell just because we have we come down here, but ultimately you can see there's a lot of support in this black level area, okay? And that's where I drew my box. This is my my purple zone here. This is where I drew this strategy, okay? Now, how did this trade actually play out? Well, first thing is, what did I notice, okay? Let me actually get rid of some of these lines, clear this up a little bit. Get rid of some of these alerts here, make it a little bit easier to see, okay? Get rid of this as well. All right, so we have our support down here. We have our resistance up here, right? This is my support line. Let me zoom in on a 1 hour. What happened, okay? Price came down. We stopped on a support, okay? Now think about this. Again, everyone who bought in the past, basically the past month of August, everyone who bought in this area here, when price comes down, breaks the support, you would expect a ton of selling to come in, right? Everyone who chased this high, we'll get into that in a second. Everyone who did all that, they're going to sell down here at support when price breaks support. But it doesn't happen, right? What happens? Price ends up breaking it for a little bit, and we immediately reverse. Boom, immediate reversal. Now, that tells me institutions are buying down here, and this was just a stop on. This was not a real move of actual market structure break, okay? Now, the strategy comes into play. It's very, very simple, right? We don't have to guess. You don't have to just randomly buy down here and hope that price goes back up. No, we simply let price tell us what it wants to do. So what do? We can zoom in on a 30-minute. What do? We wait for price to continue to go back higher. Now, at this point in time, right here, we now have confirmation that it was a stop hunt. It was a fake buy. Okay, or sorry, it was a fake short, it was a fake sell, and price now wants to make its way all the way back up higher at about 240s, okay? That's what price wants to do. And we figure out this information right here. So now when we have this information, we can set up a trade. How do we set up a trade? Well, again, the way I trade is very smart. Very smart. I start with the stop loss and the targets, and I get to entries last, okay? So we know that if price comes back down here below this low, okay, below this low right here, that is going to be our stop loss, okay? Because if you know supply and demand, if you know a few other concepts and strategies, this is actually a pretty good demand zone as well. So price really shouldn't go below that. But you typically want to use that low as the area for your stop loss, okay? Now, where do we actually use our target? Well, again, target the other side of balance, the other resistance area, right? It's going to be a very easy thing to look at, okay? Now, entries is what I figure out next, okay? Now, with this strategy in mind, you can actually use a few different risk rewards. You can use a few different targets, right? I personally like going more of a smaller time frame scalps and also holding runners for my main targets up here. So what I saw was like, okay, if on the next day, which was on this Thursday, the next day market opened, we can get a nice pullback. I can look to get in long, and I can scalp all the way up to this little supply zone, all the way up here, kind of like that, okay? And that's exactly what I did, right? So I went with the idea of, okay, let me go ahead and wait for a pullback. Got in right there in that dip. Put my stop loss below the low. Targeted the right supply. Had a nice 1.1 risk reward. And I'm still holding runners for a move. For a move all the way up towards this supply zone, which I'll probably get out soon. And then have runners as well toward my main target, which is about a 4R trade. Okay. And just like that, it's a very simple setup that simply just works if you know exactly what you're doing. And if you follow the steps in this video, you can trade this on literally any time frame, any stock, anything like this. You can see it happened literally on the other side. I can use the same example. Look at this 1, 2, 3 times in a row where we came off this resistance. What do we wait for do? We don't wait for price to go to resistance. We wait for price to stop hunt those highs. We want to see price go above those highs, right? So what happened in this area here? What happened right here on this false breakout? Well, everyone who bought in long, when the price comes back down, they now have to sell. Institutions who shorted are going to drive price lower. So we can zoom in. You can say, okay, now when price comes back into this little balance zone, you can look to get short right around here. You can set up a short position like this, put your stop of the high, and target down at the low. This would have been a nice 3.5R trade. Really, really solid. You're risking $1,000 on this trade. You're going to make 3,500. That's a pretty solid trade. That's something I would take pretty much every single time. And this works on so many different things, and it's super, super easy and simple. And let me show you one more example so you guys get a good idea of exactly how this works on a smaller time frame. So let me take a look at Roku. Same exact thing. We go on like a 15-minute, okay? And again, you can do this on like the 1-minute chart on ES futures, NASDAQ. Like you can do this on anything. But let's take a look at Roku. What do we have? We have a nice little balance zone, right? Nice little resistance up here, nice little support down here. What happens? Price goes up. We stop hunt this high here, okay? So think about this. Everyone who's short in this area here now is probably going to get stopped out. You're going to have new buyers who are buying the breakout, right? They're going to be buying this breakout right here. But what happens? Price doesn't break out. So that tells us something is gone, something is off, something is wrong, right? There are institutions here shorting. They're not strong enough buyers. So when price comes back down, you can zoom in on like a 5-minute, just like this, if you can find it. And you can look to get short. And sometimes you may miss the move, right? This comes down pretty quickly. But even if you're getting short in this area here, you can wait for a small pullback, get short, put your stop of the high, target down at the lows. That's a nice 2R trade, okay? Same thing happens to the other side. Look at what price does. Does it one more time here. Then we come down, we stop on the other way, okay? Let me go on a 30-minute chart. What does price do? We just see this beautiful little wick right here. We just stop on all these lows. Every single person who bought in this area got stopped out right here, right? All the selling pressure. Who do you think is buying these? Institutions bought this. As price comes back up, that's when you can look to get long in this area here. You target this here, and then you're out of the trade. Now, can price keep going? Could you have made a lot more money if, let's say I got in long here. Stop loss was below this low. Targeted right here. Nice 1.6R trade. Could I have made a lot more money if I held all the way up here? Yes. Is that the goal of the strategy? No. The goal of the strategy is to make money with good risk rewards, having a higher than 50% win rate, and you can do that using the strategy, okay? I'm just scalping. I'm not looking for a whole, I'm not looking to catch the bottom, not looking to catch the top. I'm just looking to catch a piece of the move. If I can just catch a small piece of this entire move, that's going to make me happy. That's going to make me money. That's how other people are going to make 10K a month. That's how I've been able to make 10K a month. That's how all of my traders make money, is simply by catching a small piece of the move with a high probable edge using this exact trading system. Now, Now, the best part about all this is that it gets so much easier when you can automate this and use OCO orders. And that is a whole other thing in itself, is automating this, being able to trade within 15 and 30 minutes a day. That's all part of a three-phase system that I use to become a full-time trader, as well as the exact system that I've used for 500 other of my students to now be profitable, okay? And they've been able to do this within just 8 weeks of learning from me. And so what I want to do for you guys is I'm going to leave a free training video in the description as well on top of that scanner video. So you can go ahead and check that out right now, because that's going to show you the exact three-phase system I use to become profitable, as well as automate my orders so I don't have to spend hours at the screen every single day, because I hate doing that, okay? I like staying here for about 30 minutes, 40 minutes, taking my profits, taking my trades, getting in and out, and walking away and being done for the rest of the day. So go ahead and check out the first link in the description. It's my free training video. And with that being said, hope you guys did enjoy. Use the strategy. You can definitely make some good profit from it. I've made a lot of money from it. And I'll see you guys in the next video.